Hi there, and welcome to Safe Option Strategies. My name is Jeffrey Dunyan. I am the owner and founder of Safe Option Strategies, and I want to let you know I appreciate you taking some time out of your schedule and viewing this presentation. I don't know if you're viewing one of our introductory presentations for the very first time, or if you've seen a number of these and you kind of have a feel for what we do and how we're doing it, but you're coming back and trying to learn a little bit more. Either way, it's absolutely fine. I'm not going to spend a bunch of time with an introduction right now because I've got a lot of material I want to cover in this presentation, and I don't want to take a really long time. I'm not going to make any promises as to how long this video may go. I'm going to try and pack as much in as I possibly can and be respectful of your time. So let's dive right into it. I've got a chart up here of the Dow Jones Industrial Average. Well, let me back up a little bit. Let me say this first. I'm going to make an educated guess that you're online watching this presentation, number one, because you saw some email that was sent out from our marketing company, and it told you to check this out and take a look at how to learn to do this stuff, and I appreciate you responding to that. But I'm willing to bet that if you opened that email and if you clicked on the link and you made it as far as watching this class, that you did it because the market is just pushing you around right now and kind of beating you up, and you're looking for a way to be more secure, to be more safe, to profit, to be consistent. All of these things are critical if you want to survive the markets today. It's not easy. 3 months ago, we got hit with something that we have never seen before. Everyone refers to this as a black swan event. The markets were going 12 years on a bullish run, not a complete full bearish turn in the market. Not that we didn't have little pullbacks, not that we didn't have little brief periods of time where things were correcting, but we had not really gone into the technical definition of a bear market for 12 years. That takes us all the way back to 2008. If you were trading in 2008, you know how tough that was. You know what a struggle that was, and 12 years of a bullish market certainly made up for it. But back in 2008, there were reasons behind that bear market. There were things that people saw coming. It was still tough to trade in that market, but the writing was on the wall. There were things going on that led to that. This was a black swan event. When this COVID-19 virus hit, when this coronavirus hit a few months ago, it took everybody by surprise. The warning signs weren't there in terms of what this could do to local and national and global economies, what it would do to the stock market. We had the stock market fall to its lowest point, from its highest point to its lowest point. It actually got down 35%, and it did it in just a matter of a few weeks. That is unprecedented. Even back in 2008, when the three major indexes, the Dow Jones, the NASDAQ, and the S&P went down over 50%, it took them the better part of a year to do that. It was from late 2007 until the end of first quarter of 2009 that the stock market found a bottom and then started to climb back up. 2009 was actually a pretty impressive year because 3 out of 4 quarters it was going back up. This is a tough situation to deal with, and no matter what anyone tells you, this is an impossible situation to predict. They call it a black swan event for that exact reason. I was listening to a radio ad, and I saw a television ad from the same company just in the last couple weeks. They're actually one of my competitors, and they're claiming that they predicted this. They said, we predicted this back in early January. We said that this, the markets were going to do this, and all the signs were there. We have this great software. It only costs you $15,000, but it's this great software. They don't tell you that part in the ad. We've got this great software that will predict this, and it told us this was going to happen. Well, look, I'm not going to name the company by name. I don't do that, but I will tell you this: that same company has predicted a 35% pullback in the stock market on average 3 times every year since 2009. And they've been wrong every single time until now. So be careful be really careful what you're believing when people are out there saying stuff like that. You can't predict this type of thing. And there's not time. Usually there's not time to react to it. The only way to be prepared for something like this is to always be prepared for something like this. You know, we poke fun at and we make jokes every now and then. And there's even in the last few years, people have even coined this phrase, preppers, and they, you know, it's probably pretty insensitive, but we make jokes about these people who are predicting the end of the world, or maybe they're just predicting, you know, a massive earthquake or a massive storm or something that's going to wipe people out. But you realize those are the people we look to when there is some type of a natural disaster. They're the people who have stored food and money, and they've become more prepared for things that are going to happen. And I'm not promoting any type of extremism in that case, but the way to protect against something like this is to always be prepared for it. Almost as hard as predicting that something like this is going to happen is to manage the reverse when it goes up so fast. Right up until these last couple of weeks, let me make sure I've got my little pin here that I can draw on the screen. Right up until these last couple of weeks, this was almost as difficult for people as the drop, because once people took the time to go short on positions, to get their portfolio turned, to kind of handle a bearish direction, all of a sudden it's going back up, and it's going back up almost as quick, and for some individual stocks, even faster than it fell. And then we had things flatten out for a couple of weeks, and now if you're watching this presentation within, you know, the first few hours after I've recorded it, we've had a couple of days in a row now that have sold off pretty steep on the major indexes. And I just heard someone on the news today saying this right here is just the beginning of coming back down and testing this again. And the reason I'm taking time to show you all of this is because I'm telling you, I know you're taking time out of your schedule right now because you want to learn how to profit off of this type of thing, or at the very minimum, you want to learn how to protect yourself from this type of thing wiping you out. That's what people are really focused on, is not getting wiped out. It's sad to me, and I don't wish this upon anybody, but there are some people that lost 35% of their retirement on this drop, because their retirement, whether it was a company 401k, whether it was a pension plan, whether it was a personal IRA, it was tied directly to the major indexes in the stock market. Now they've got about half of that back from that steepest point. They're about halfway back, but that's still a pretty big hit to the portfolio. In fact, that's a really major hit to the portfolio. A lot of people that were just getting ready to retire or just barely retired are second guessing those decisions now. I thought I was going to retire this year. Can I do it now with as big a hit as this has taken? I just retired last year. Now I'm thinking about going back to work. I mean, I've had those conversations with people in these last few weeks. But there's a way to fix all that. And that's what I'm here to show you. There is a way to keep this type of thing from ever affecting you in a negative way. What we at Safe Option Strategies, we have a complete education on everything you need to know about trading stocks and options in the volatile markets that we're experiencing today. And it doesn't matter if you've been trading options for 20 or 30 years and you feel like you're pretty adept at it, or if you're brand new to the stock market, you've never traded your own money before. We can help teach you everything I'm going to show you for the next, hopefully 30, 40 minutes, no more than that. Everything that I'm going to show you, we teach you in a very complete, very thorough education. Now, I'm going to do something different right now than most companies will do. Most of my competitors will go through a 30-minute or a 40-minute or an hour-long video like this, and they'll get you all worked up and they'll get you all excited, and you'll listen to what they say, and a lot of it is this get rich quick kind of stuff, and they just build up the hype, and then they say all this can be yours for only $5,000 or worse than that, and you're thinking, that's too much, I can't afford that, I can't do that. Maybe it's not even a matter of affording it. Maybe it's a matter of, God, I spent money on a company a year ago and I'm wiped out. It didn't help me at all. It may have nothing to do with whether you can afford it or not. It has to do with you feel burned and you don't want to spend that money again. What I think is even worse is these companies that say, hey, you can do all of this and it's going to cost you $50. And you say, hey, for $50, they're going to teach me how to take $1,000 and turn it into $2 million in a couple of years. I'm all in for $50. And think about that. I'm saying it a little bit sarcastic. I'm being a little facetious in the way I'm presenting this, but think about that. No one, for $50, no one is going to show you legitimately, truthfully, how to turn $1,000 or $2,000 into a couple $1,000,000. And I hear ads for that. I see this one YouTube ad over and over and over again that gets played, and the guy's like, yeah, I started out with $2,000. Now I'm on private jets all over the world day trading. You know what? You can't even if what he did is true, and I don't know if it is or not, you can't teach that to someone because that's plain stupid lucky. And probably if I backed up a couple of screens, I'm not going to, but if I backed up a couple of screens and showed you that chart right now, I'll bet there are more people who have taken $2 million and turned it into only $2,000 over the past few months. Because when the markets get like that, those get rich quick things, they just absolutely do not work. So those companies that tell you they can do that for $50, here's what they're usually trying to do. We can show you, we can teach you all this stuff for $50. And then they teach you, this much of it. And then they say, and this is your $50. And then they say, oh, well, we can teach you this much more. And this is what will really make you rich. And this is only going to be, $1,500. And you think, well, and we'll take the $50 off of that. And then you get to this point and they say, well, what you really need is the more advanced stuff, and that's only going to cost you another $2,500. And then you get to here and they say, what you really need is the one-on-one personal coaching help, and you get to go to the seminar, and that's only $4,500 more. And sometimes, folks, there's no end to how far this goes. And companies get you in the door and they just want to upsell and upsell and upsell and upsell. And that's not what we do here. And look, right now, I'm putting all my cards on the table. What I'm going to do is save you some time. Right now, today, I'm going to save you some time. And I'm going to tell you that at the end of this presentation, I will show you what our education program is and what it costs. And there's no upselling. You can do a monthly program, you can do a quarterly program, you can do an annual program, or you can do a lifetime program. But regardless, we're showing you everything right up front. And people that join our program for life never, ever, under any circumstances, have to pay a penny again. And it's a fraction of those prices that I was just showing you. It's a lot less than those. Most of my competitors are looking to get $15,000 out of you. Now they got to get paid something to be able to provide you with some education and to teach you how to do this stuff. But most of them have a goal to get you up to $12,000, $14,000, $15,000 or more. We don't go anywhere near that, and we show you everything up front. So the reason I'm telling you this right now, before I get into the heart of what you're here to look at, and before I get into the, however you want to say it, the meat and potatoes, show you where the rubber hits the road, pick whichever cliche you want. Before I get into that, the reason I'm telling you what I'm telling you right now is because I don't want to waste your time. And with all due respect, I don't want you to waste my time. If you're looking for something for nothing, you can find it in 1,000 different places online, and you will get exactly what you pay for. I promise you, you will get everything you pay for and maybe more if what you're looking for is something for nothing. That is not what Safe Option Strategies is about. Okay, I'm being brutally honest with you, but I'm doing it out of respect. I'm doing it because I don't want to waste your time. But I'm telling you right now, if you're willing to make an investment in time, and if you're willing to make a small money investment into learning what we're doing here, I will teach you how to never lose money again. And that's the key to profit in the stock market. Learn how to never lose money, and making money becomes one of the easiest things in the world. There are millionaires made every week, every month, every year in the stock market. It is still the #1 place to create wealth in the world is the US stock markets. That's not debatable. You can look up statistics on that. But you've got to be willing to invest a little bit of time and a little bit of money to learn it. So I'm not going to surprise you with anything. I'm not going to get you all worked up and all excited and then say, and all this can be yours for $15,000, or hey, for only $50, you can learn it all. And then you find out 2 weeks later that you're getting the tip of the iceberg for $50. I'm not going to do that to you. I'm risking the fact that maybe you log off right now and don't even finish this presentation, but I'm willing to take that risk because I hope that you'll appreciate the honesty. And that's what we try and do here. All right, let's dive right in. How do we do this? How do you trade risk-free in the market? Okay, I'm going to go over specifically how you can trade risk-free in the market. And then I'm going to talk to you about a concept called trade adjusting, because when you learn how to set up low to zero risk trades, and then you add to that how to make trade adjustments. Now that the trade adjusting has become this buzz phrase over the last 8-10 years. 15 years ago, when I started teaching this, there were 1 or 2 companies that were teaching you how to trade adjust. And folks, I've been doing this for a long time. I know how to do it. I know how to teach it. And I'll show you some evidence of that. There's a lot of companies that talk about it right now, and I've looked at some of these companies, and I'm telling you, you're rolling the dice. They just, that's all I'm going to say. They just leave things very incomplete. We know what we're doing when it comes to trade adjusting, and I'll give you some examples of that. All right, so how do you trade with zero risk? Don't you get tired of these disclaimers? All trading comes with risk, and you'll lose everything you have if you don't accept the risk. And you know, I mean, you hear it on TV commercials and radio commercials. You see it in print all over the place. I legally have to tell people that I can't be responsible if they lose money. That has more to do with I can't force anyone to follow the strategies that I'm sending out. So I have to use that language too. But folks, there is a way to trade with zero risk. And all of it starts with the long put option. Now, if you're brand new to trading and you know nothing about option trading, let me just tell you this really quickly. We can teach you everything in detail that you need to know to become an expert option trader, and it is far easier than you think. Do not get intimidated by having to learn options. If you think you're an experienced option trader already, I can guarantee you we're going to teach you some things that you can do and some different ways to use the options that you've never done before, that you've never seen before. I promise you that. But don't be intimidated by the fact that you've got to learn options. Trading with zero risk starts with learning about the long put option. The long put option is actually a contract that you purchase, and it gives you the right to sell a stock at the fixed price for a set period of time, no matter what the price of the stock does. A long put option is going to go up in value as the corresponding stock that it goes with goes down in value. And in almost every way, a long put option can be used with stock ownership almost exactly the way an insurance policy works with your car or your home. And think about this. You go out and buy a car. Let's say you're enamored with Tesla and you love the reviews and your neighbor has one, it's a great car, and you go out and buy a Tesla. Well, you're not going to go spend $50,000 on a car, and I think that's one of their cheaper models. You're not going to go out and spend $50,000 on a car and not insure it. And even if you're able to pay cash for the car and the bank isn't going to force you to have the insurance, you got to have liability insurance. That's a requirement. And chances are, like I said, even if you paid cash for that, you're going to get the comprehensive and the collision insurance because you don't want anything to happen to that car that you just spent $50,000 on that can't be taken care of and replaced without a lot of extra money out of your pocket. Now, you're willing to trade the premium for that insurance policy for the protection it gives you. Go a step bigger and think about your home. Okay, for a lot of people, their home is the largest investment they'll ever make in their life. People spend on the low end $100, $150, $200,000 for a home, and people spend multi-millions of dollars for a home. I think the average home price in the U.S. across the whole country right now is close to $500,000. I think it's between $400,000 and $500,000 right now. I may be wrong on that, but I think that's what I heard recently. You would never think about not having homeowners insurance. It wouldn't even cross your mind because you don't spend that much money on an asset without protecting it. And most people have no idea that they can do the same thing with their stocks. You can buy a stock and you can buy a long put option, and you buy it for the value of the stock. You don't have to pay that much. What you do is you pay a premium, just like with an insurance policy. You don't buy a $50,000 car, get a $50,000 insurance policy, and pay $50,000 for it. You get a car for $50,000. You buy a $50,000 insurance policy, and you pay, I don't know, $7,500 a month for that, maybe a little more. Maybe it's more like 150. I've got mine and my wife and several kids that all have cars on our same insurance policy. So we're into it, a few $100s every month to insure all the cars that are on our policy. But they're all valuable, even the cheap ones that we have, they're valuable enough assets. We're not going to go without that insurance. But you buy an insurance policy for a premium that's a fraction of what it's going to cover. The insurance company is going to take the risk that over time you pay this often enough that it's worth them protecting you at that price. So when you do this with stocks and options, you buy the stock, you buy the long put option, and then if the price of the stock drops, the value of the long put option goes up, and it goes up proportionally to the drop in the stock, not right to the penny, because you're going to be out that premium. If someone crashes into your car and then drives away and you've got to file that claim through your insurance company, you're going to be glad that you're covered on the cost of the repair, but they're not going to give you your premium back. And it's the same thing with the long put option. The option will go up in value, in accordance with the stock going down in value, but the only money you're going to be out is your premium. And that's the cost of insurance. And in almost every way, a long put option with the stock works like insurance. Now, let me show you how to take this one step farther and create a zero risk trade. Okay, this is from a couple of weeks ago. And by the way, I think at today's finishing price, the day I'm doing this recording, I think at today's finishing price, AMD is down around $53 a share. So from where we set this up a couple of weeks ago, it's already down $4. Not a huge amount, but it's already down a little bit from that. But here's how you set up a risk-free trade. The day I took this screenshot a couple of weeks ago, AMD, by the way, is Advanced Micro Devices. If you don't know that company, that's the ticker symbol for Advanced Micro Devices. They make computer chips, and their chips are in a lot of the different products that we use. So AMD stock was trading at 57.05 this day. We could get a covered call. Now, I haven't talked in detail about a covered call, but it's a big part of the risk-free trade. Think about when you were insuring your first car, when you bought your first car. There's a chance for some of you, maybe not all of you, but there's a chance that for a while you were still living at home, while you were finishing high school, maybe for the first few years you were going to college, there's a chance that maybe mom and dad were paying for that insurance. A covered call is where someone will pay you some money for the right to buy your stock away from you at a certain price within a certain period of time. So we're actually taking a credit in right here, and then we're going to buy that. This is our insurance policy. We're going to buy that long put option. That's our insurance policy. And when we add these together, 57.05 minus 497 plus 418, what we have is a trade that has zero risk. And let me get my little scribble marks off the screen here so you can see this. The total cost of this trade per share is $56.25. That's just basically this, and this added together. This one is a credit. $56.25. From the time we open this trade until our insurance policy expires, we don't have any risk in the trade. We have the right to sell that stock at $57 a share. Now, this is a couple of weeks old. This date is coming right up. It's almost here. That's the length of our insurance policy. We're going to have to decide soon. Do we extend our insurance policy, or do we leave it the way it is? Do we let our insurance expire? Well, this is part of what we teach in our program, is when to renew the insurance, when to let it go, when to get out of the whole trade for profit. It's all part of what we teach at Safe Option Strategies. But the important thing I want to show you right here is that for a period of time, we had zero risk in this trade because we had the right to sell at 57 and it only cost us 56.25 to get into it. This is a few weeks ago. It might have been 3 or 4 weeks ago. Apple was trading down at 279. We could have bought shares of Apple for 279.94. We could, whoops, I advanced past that one too fast. We could have got a credit of 13.18 for a covered call, and we could have got an insurance policy, a long put option for 280, and had a total cost per share of 279.37 with the right to sell our stock at 280. Now, do you know why I did all these a few weeks ago? All these stocks that I'm showing you had earnings reports coming up, and we were insuring these companies in case after the earnings report, something happened and the stock dropped dramatically. ExxonMobil. We could get into ExxonMobil for $44.20 a share, have it completely insured at $44.50 and have zero risk in the trade. Coca-Cola. I'm just showing you a variety of these so that you can see this concept doesn't just apply to one stock. These are companies you've heard of. These are companies you know. And every single day, I can find you examples of companies that you can set up trades that are zero risk. Now, they're zero risk for a period of time, and then you've got to adjust the trade. And when you make the adjustment to the trades, these can be incredibly profitable trades. This is one of my favorite ones. This one actually had 4 cents per share of risk. 4 cents per share. Under Armour reported their earnings just at the beginning of this week. And Under Armour is now trading, as of today's market close, they're trading at $7.90. Now, if we had just bought the stock and nothing but the stock at $10, we'd be down 21% in Under Armour right now at $7.90. Instead, we're down 4 cents per share because we could sell the stock right now for $10 a share, and we only spent $10.04 to get in. Under Armour's dropped 21% since their earnings report, 21%. And we could exit that trade right now for only a 4% loss. Okay, let me tell you one more thing about these zero risk trades. A lot of people don't want to own stock. Okay, everything I've been talking about up to this point has to do with owning stock and then using the options as an insurance policy. Some people don't want to own the stock. Everything I'm showing you, if you understand options a little bit more, and if you don't, we can teach this to you. Everything I'm showing you could have the stock substituted with a leap long call that costs a lot less money. And there's a few nuances and a few differences in how the whole trade works, but you can do the same thing with a leap long call, maybe one that's a little bit in the money, and have the same protection. And I'm showing you how to not lose money on these trades. These trades can be incredibly profitable. In the interest of time, if you want an example of how these collar trades can be adjusted to create a lot of profit, because I'm showing you how to protect them. These can be incredibly profitable trades when we start adjusting them. In the interest of time, if you want to learn more about this, at the end of this video, you should get a little like link that shows up over on this side of your screen that I think it says next video or something like that. And you can click on that and you can go to another video on our website that will show you more detail about how to turn this into a very profitable trade. But what I want to give you a taste of right now is how to protect it. These trades can be profitable upwards of 50, 60, 70% annually and have no risk at all. Now, let's talk about trade adjusting. A lot of people that come and take a look at Safe Option Strategies, they don't want, oh, by the way, that entire thing that I just showed you with the zero risk trades, the stock, the short call, the long put option, That's called a collar trade. We have an entire course in our program. There's an entire course that deals with nothing but collar trades. And if that's all you're interested in learning, and I'll tell you, the collar trade is most suited for a person that has maybe a little bit bigger portfolio, and their number one goal above anything else is, I don't want to lose any of this, but I still want to give it room to grow. That's what a collar trade is for. Collar trades are incredibly safe, secure trades, and they can be incredibly profitable. And some people still don't want to own stock. They want to trade options only. Let me show you now how we do trade adjusting for the purpose of option only trading. Option only trading is going to come with more risk. That is a simple fact. There's not a way to do option only trading and have it be zero risk. There are ways to adjust a trade into a zero risk position, or more importantly, take a losing trade and adjust it back to a break even or a profitable trade. And one of the things that I hear, for 15 years, I've been teaching people how to do this. And one of the things that I hear over and over and over again is people who have made money on a trade, and then they've reinvested that money. So they add this to this, and they start the next trade with a little bit more, and they make some profit, and they reinvest that money, and they make some profit, and they reinvest that money. And one trade out of 4 or 5 or 6, one trade goes against them. And the loss comes fast, and it comes furious, and it's a tough situation to deal with. When you're trading with options only, you can have the perfect strategy, you can do all your homework, you can research that thing forward and backward, and suddenly something can turn on you, and you can find yourself at a 60, 70, 80% loss in the blink of an eye. You can be in trouble on that trade. And I hear from people all the time, some variation of, I'm making money on 3 out of 4 trades I put on, or 6 out of 7 trades, 9 out of 10, whatever the number might be. But then they say, but overall, I'm losing money. That's a tough spot to be in, but that's most people I talk to, most people I trade with emails have some story similar to that if they're trading options only. And if you don't learn how to adjust trades, this is what you're going to get, or worse, when the markets are doing what they're doing these past couple of months. When you learn, and I'll give you an example of some trade adjusting. When you learn how to adjust trades, this is what happens that's drastically different. You make money on a trade, you reinvest that money. That's a smart thing to do. You make money on that trade, you reinvest that money. That's a smart thing to do. I'll never tell you not to do that. You make money on that trade, you reinvest the money, and all of a sudden you get that same ugly bearish movement on the side. Or maybe you were in a bearish trade and it's a sudden bullish movement. It can be either direction. But because you set it up correctly, because you learned how to adjust it, instead of taking that 50, 60, 70, 80% loss, you bring it back to a small loss or a break even, maybe a profit. And the difference that will make in a portfolio is indescribable. I could give you example after example after example after example of how these, and I'll show you a couple of them, but how these trades have literally saved portfolios. And look at the difference. Same 4 trades, same trend in the market. And when it suddenly went against us, we got wiped out, or we knew how to adjust and we were still profitable, and the difference is staggering. Hey, let me tell you about a recent trade that we sent out to all of our students. We trade with our students. I'll get to that in a minute. We literally trade with our students. When this is the company Zoom, the video conferencing company that's become all the news and incredibly popular during this COVID-19 pandemic. Everyone's talking about Zoom. My son's school has been using Zoom like crazy. You know, Zoom went from an average of 5 million daily users to an average of over 300 million daily users in the first 30 days of this pandemic. And the stock was very nicely rewarded. And right about here, we put on a trade thinking that Zoom was going to continue to go up. And at the very least, we thought it would stay above this strike price right here. We set up an option only trade thinking Zoom's going to stay above 135. And all of a sudden, Zoom got some news that came out that they had security issues. And a couple of people were going to sue them for these security breaches. And the city and the state of New York said, we don't want our schools to use Zoom anymore. And Google came out and said, we don't want our employees to use Zoom anymore. And Tesla came out and said, we don't want our employees to use Zoom anymore. And all of a sudden, Zoom was just plummeting. And if we didn't know how to adjust trades, when this went down like this in a sudden fashion, when this went down like this in a very sudden fashion, we would have gone from being up, 5, 6, 8%, maybe 10%, to all of a sudden in the blink of an eye, this trade was down 80%. Now, we shared with all of our students, we're teaching them how to do it through all of our online classes, but we sent this trade out to all of our students. So instead of leaving them hanging and letting them take a 50, 60, 70, 80% loss, we showed them how to adjust this trade to the downside. Now, this is what gets really tricky. All of a sudden, after a week to the downside, suddenly Zoom was skyrocketing back to the upside. And now a trade that we had pointed in a bullish direction, we adjusted for a bearish direction, and now we're going bullish again. And folks, I'm telling you, some of these other companies that say they know how to adjust trades, they're going to cause you a world of pain because they don't know what to do when this happens. Instead of taking a big loss, we stayed with it. We made a second adjustment to the trade. We're going to close our trade in Zoom. Whoops, I advanced that again. Sorry about that. We're going to close our trade in Zoom this coming Friday for about a 5% profit. Most people would have gotten out with a stop loss somewhere in here. If they tried to make an adjustment to a bearish direction, they would have got killed going right here. And instead, we made a couple of adjustments and we're going to get out of this trade with profit. This zigzagging, more than anything, when you're trading options only, more than anything, it's this back and forth that can just wipe you out. Even when the trend is overall bullish, this will just wipe you out. Think of that as a roller coaster and how sick that would make you, especially if you're like me and you're getting older and can't handle roller coasters anymore. Now, let me tell you another thing that happens to a lot of people and why it becomes so critical to learn how to adjust trades. Okay? Yesterday morning, with all of our students, we entered into a trade on Amazon, and we felt like this move up on Amazon was going to either continue back up to where it touched a couple weeks ago, or that at the very least, if it flattened off, it would stay up here probably in this range or above. And we even set the strike price of one of our options down a little bit below that to give ourselves a little wiggle room. But we set up a trade to take advantage of a bullish or even a flattening position. And at the close of the day yesterday, Amazon sold off in the last hour of trading. Amazon sold off nearly $40 just in the last hour of trading yesterday. Now, whatever you think about a $40 gain or drop on Amazon, from a percentage standpoint, this is an expensive stock. So from a percentage standpoint, that's not a real big deal. But from a dollar standpoint, it looks pretty devastating. Here's the thing that stressed some people out. Midway through the day, the trade that we opened on Tuesday morning was up about 8%. And it was profitable about 8%. In the last hour of trading, it went from being up 8% to being down 22%. We were negative 22% at the end of the day. Now, let me tell you what most traders would have done. They would have sat and watched, and when it started to go down, they would have tried to get out and preserve some of that. But I'll tell you, this 8% to the plus side, it was gone in a few seconds. I was watching when this happened. That 8% profit we had was gone in a few seconds. By the time you could have set an order and had that order fill, you would have missed it. You would not have preserved, and maybe you would have got out with only 5% loss or 6% loss or 10% loss. And you'd be saying, hey, that's a lot better than a 22% loss. But let me tell you what happened instead. Oh, well, and let me give you one other scenario that happens to a lot of people. Stop losses. Don't you just love stop losses? They protect you from everything. No, they don't. A stop loss only tells your broker to exit the trade if it goes past a certain point. This went just in yesterday's trading. Let me clear my marks off of here so you can see this. Again, this all happened like in the last 30 minutes the market was open. This drop from right up here to down here, if you would have had a stop loss in place, by the time your broker filled your order, you would have been on the bottom end of this. And a stop loss that you thought was going to preserve some profit or keep you at a 1 or 2 or 3% loss would have resulted in a 20% loss on this trade. Now, I had several of my students email me after the market closed last night, and they said, what do we do with Amazon? They dropped all this way at the end of the market today. And I reminded them, we know how to adjust Amazon. We know when to adjust Amazon. So even though this looks kind of bad, if we book this loss right now, we're done. We're out of Amazon. We've got a loss. Knowing that we can adjust it, we have the luxury of not being panicked over something like this. And a couple people that were newer in our program needed a little reminder. That's okay. That's fine. I said, we know what to do, and we don't have to do it unless Amazon drops below $2,340 a share. And even then, they'd have to finish below that for us to really be worried or stressed about it. Now, Amazon finished today. Let's see where they finished. Oh, I've got it right here, but it's small. It's small on my screen, so I know it's small on your screen. They finished today at $2,367 a share. So guess what? We don't have to do anything with Amazon. They very briefly, for a couple seconds, got below that 2340, but not. We're looking to make an adjustment if they had finished below that price, and they didn't. I don't know if Amazon will be up tomorrow or down tomorrow. I can't predict that. I honestly cannot predict that. Neither can you, and neither can anyone else. And there's no software, and there's no formulas, and there's no magic tea leaves, and there's no crystal ball. There's no way to predict what Amazon is going to do tomorrow, because all the mathematicians and all the people that write codes and write formulas can tell you that they've got this perfect system for figuring out what Amazon's going to do tomorrow. And there could be a news story that breaks overnight about Jeff Bezos having, and I'm not wishing this, knock on wood, but there could be a news story saying, hey, the owner of Amazon has tested positive for COVID-19, and he's going to shut down the whole company for a couple weeks to make sure none of his employees got infected by him. Do you know what that would, do you know what a story like that would do to Amazon stock? It would open tomorrow somewhere down around here. And guess what? We would make the adjustment to the trade, but we're not going to lose sleep over that. Fact of the matter is, after today's close, our Amazon trade is back up a little bit. Barely, it's positive by 1% or 2%, but it's actually back up a little bit today. And if they just stay flat or go up a little bit tomorrow, it'll be more profitable. These are real examples of what we're doing with this trade adjusting, folks. Our program teaches you step by step, whatever type of trade you set up, we teach you in our program step by step how to make an adjustment to that trade and when to make an adjustment, when the stock crosses over certain places, when it pulls back under certain places, when you get certain technical indicators, when there's news supporting it. We teach you all of that. And while you're learning it, you can simply follow us along in the trades that we place. You can do that indefinitely if you want. One of the toughest things about any education program for trading options or stocks or futures or commodities or Forex or Bitcoin or gold, whatever it's going to be, one of the toughest things is how do you learn how to do it and make money at the same time? What if your schedule makes it to where you can only spend 30 minutes to an hour a day and not even do that every day trying to learn how to do this stuff? What if your schedule is such that you can't be in front of the computer when the stock market is open? Is there a way that you can learn how to do this but make money at the same time? That's one of the things that we do. We teach you all the basics that you need to learn how to do this. And we start, for those that need it, we start with the very basics. In fact, a lot of what I'm showing you right here on this screen, these are different classes that we have. A lot of this we put on our website for free. If you've never traded your own stocks before, if you've never traded options before, we'll teach you some of the basics free of charge. Knock yourself out. Play around on our website as much as you want. Learn as much as you can through the stuff that's on there for free. But when you want to start getting into the strategies, when you want to start learning, why do I choose this trade strategy over this trade strategy? And why would I want to be in for this amount of time instead of this amount of time? That's the part of the education that you pay for. And while you're learning it, we provide you with a lot of trades that you can put on. You don't have to put on all of them, but we provide you with a lot of trades. Nothing, let me give you a quick little analogy. Imagine trying to learn how to swim from a book, and only a book. Let's say the greatest swimmer in the, Michael Phelps, okay? Everybody knows who Michael Phelps is, right? Let's say Michael Phelps wrote a book on swimming, and he had some great diagrams in there and some great illustrations, and he got some professional writers to help him describe exactly what he's doing at every step of the way, and you'd never swum before, you'd never been in water over your head before, and you read this book, and you said, all right, I'm gonna jump into the deep end of the pool, because I've read Michael Phelps's book. I'm sure I can swim now. Now, if you've never swam before, what's going to happen to most people? They're going to jump in that water, whether it happens in the first couple of seconds or whether it takes a half a minute to a minute of treading water, chances are they're going to panic at some point in time. And if you've never swam before, it doesn't matter what you've read, it doesn't matter what you've studied, it doesn't matter how good a student you are, chances are you're going to panic and you're going to drown. Now, wouldn't it make sense to get into the shallow end of the pool, and more important than that, get in the pool with someone that knows how to swim? Instead of being in there possibly drowning, get in the pool with someone who knows how to swim. And that way, if you start to go under, they can help hold you up and say, okay, you're doing this right, but you need to do this different. I know you read the book. I get that. You read the book, but you're doing this wrong. You got to do it this way. Look, watch me, follow me. Let me hold you up while you're learning this. See, the way to learn and make money at the same time is to trade with us. Multiple times every week, we send trades to our students. We detail the strategy. We show you where to get into the trade, what expiration dates and strike prices. We show you how the trade is structured. We give you a little bit of information about why we chose this trade, and then we detail what we're going to do next. We'll tell you what's the next step in this trade. And we do this over and over and over again, and you can place these trades with us. When we need to adjust a trade, we show you, we say, look, here's the trade we have open right now, and here's what we're going to do tomorrow. We're going to make some adjustments, and if you want to get in and you're not in yet, here's what you're going to do. And we do all of this with you. And no one has to be in front of the market while it's open during the day. Any trade that we send to our students, we send it after the market has closed. And you can get in or get out or make the adjustment the same time we do the next morning. And folks, this is maybe one of the most important things I could show you. This is an example of a trade we did just the other day. Well, I'm sorry, that one was a couple weeks ago. I take that back, my bad. I honestly forgot I had that picture in here. This was one from a couple weeks ago, but when we placed this trade a few weeks ago, we were in it for about 3 days and got out, I think, with 18% profit, because we put this trade on. It was a super, super low risk trade, very high probability trade, and we got our profit in just a couple of days. Fantastic trade. Last year, the trades we sent out to our students, the option only trades that we sent out to our students, netted us, well, they netted us 92%, if you can see that down at the bottom. These ones that I'm circling right here, these are all trades that we should have lost 50% or more on. On the Disney trade up there by the top, we actually turned it into an 8% profitable trade. That Valero trade, we turned into a 3% profitable trade. We took a loss on Best Buy. It was the worst loss we had last calendar year. We lost 26%. Should have been a 90% loss. Our adjustment got us to only a 26% loss. PayPal should have been a 70, 75% loss. We got it back to a 13% loss. Costco, that trade should have been about a 35, 40, maybe 50% loss. We got it back to a 5% loss. We don't make money on every trade. We occasionally take some losses on some trade. I'm showing you this very intentionally because I'm not going to be dishonest with you. I'm not going to pull the wool over your eyes. We lose money on a trade every now and then. But every one of these trades could have been worse by triple or quadruple what it was. And a couple of these we turned into winning trades because we know how to adjust and because we can teach you. And every one of these were trades that our students could follow us on. 92% last year. The best of the 3 market indexes last year was up 35%. It was a great year at 35%. We were up 92%. I think we've had 1 year in the last 15 years that we did not double or more what the market indexes, what the best of the 3 market indexes were. I think we've had 1 year in 15 that we have not outperformed the market by at least double. And that 1 year that we didn't do double what the market did, we were almost double. We were within a few percentage points of doubling the market index. That's folks, I'm telling you, this stuff works. It works really well. And you don't have to have a lot of money. If you're trading options only, you don't have to have a big portfolio to do this. If you've got $5,000 or more that you can trade with, you can do this easily. I don't make that a requirement. It's a suggestion. It's a recommendation that you have $5,000 or more that you could trade with, but it's not a requirement. I've had people join my program that have a couple $1,000s to trade with, and they can still make money doing this. Every day of the week that the markets are open, we do a live class for our students to talk about the trades that we're doing. We have better support than I think any company out there. Every one of those gets recorded and put on our website immediately so that you can go back through them. I absolutely believe we have the best education in our industry. I told you we have a collar trade course that focuses strictly on the collars. We have a spread trade course that focuses strictly on the spread trades. Most people that join our program on any level do both. You don't have to. If you're an option only trader, take a close look at our spread trade program. See if it's a good fit for you. If you love this idea of collar trading and your number one goal is to be zero risk, take a look at the collar trading. I recommend you combine them, and we'll make you a really good discount offer if you do combine them. Folks, this is the difference this type of trading can make. This is the difference it can make. Here's the year that we didn't quite double. No, we didn't quite double, came close. But look at where we're at right now. It's almost the middle of May 2020. Dow Jones is still down 20% from the highest point it was at. Or excuse me, still down 20% from the beginning of the year. It's still farther down than 20% from the highest point it was at, but it's down 20% from the start of the year. The NASDAQ was positive up until a couple of days ago. And from the start of the year, it's back into negative territory. The S&P 500 is in negative territory. We're only in May, and we're up 21% already. Which looks more appealing to you? That or that? The proof is in the pudding, folks. Whatever I say, however you like or hate the sound of my voice, good thing I'm not doing a video. I've been told I have a face for radio. Trying to insert a little humor in there. You know, whatever you think of what I'm saying or how fancy our website looks, this is where the proof is that this works. These are real results. We don't pull any punches. We'll show you when we lose money on a trade, and we'll show you all the trades we made money on. And more important than any of that, we'll show you the ones that should have been losses that were either much smaller losses or we got them back to profit. Our pricing for our program is very straightforward and very simple, but let me tell you something before I bring the prices on the screen. Don't take a look at these prices and log off. Stay for just a couple more minutes because I'm going to tell you how you can get a pretty good sized discount on our program. We keep our pricing really simple. For the collar trade program, there's a way to do it monthly, quarterly, annually, or a lifetime membership. For the spread trade course, there's a way to do it monthly, quarterly, annually, or lifetime. You save a little money if you do it quarterly, annually. You save a lot of money if you do a lifetime purchase. Or you can combine any one of them, and it's no different if you combine them. That's just this plus this equals this. That's pretty simple. But for anyone listening to this intro video right now who will take the time to either call or email us, and I'll show you in just a second how to do that. If you'll take the time to call or email us, I'll show you a way to get a really incredible discount from these prices. And let me tell you this. Let me tell you this before I even go to that step. I told you right up front, I'm not one of these companies that says, hey, I'll teach you all of this for 50 bucks. And then once I get you in, I try and get more out of you, and I try and get more out of you. Now, obviously, if you just do a monthly subscription, that's monthly. And obviously this is quarterly, but it's just a way to pay for it without having to come up with a bigger chunk of money right up front. That's all it is. That's all the quarterly and monthly is a way to do it without coming up with as much money right up front. That's up to you. It's not any more complicated than that. But folks, even without our discount, that is the maximum amount of money you could pay to have everything in our program for life. And I get asked the question from time to time from people, well, what does it mean lifetime program? Is there any part of it that I have to renew, or is there anything that I could add on to it later? No. The answer to that is no. If you purchase our lifetime membership to anyone, the collar trade program, the spread trade program, or the combined program, if you purchase a lifetime membership to any of those, lifetime means lifetime. You will never, ever pay us a dime of money again, ever. That is my promise to you. It doesn't matter if I add things to the program. It doesn't matter if I increase the number of classes, if I start sending out more new trades, if I expand everything, it doesn't matter. You purchase a lifetime membership, you will never pay another penny to our company again. I'm not aware of any companies out there in this industry that will do that for you. Now, you want to get a pretty sizable discount, and I'm talking a pretty sizable discount off these prices. Below where you saw this class on the website, right below that, is a simple little form that you can fill out. You can tell me your first name or you can make up a name. I need your email address. I can't respond to you without. Do not put a phone number right here unless you want a phone call. Okay, I need to emphasize that. No one at Safe Option Strategies is going to call you if you don't want a phone call. But if you put a phone number there, we're going to give you a call. We're not going to try and talk you into buying our program. We're going to call you to answer your questions. We're going to call you to see if there's a way we can help you out. We're not going to try and talk you into anything. So you don't need to be afraid to put your phone number there, but I only want you to put your phone number in that field if you want us to call you, and then ask any questions you have right here. I don't think there's much of a limit. There's probably a limit somewhere. I don't think there's much of a limit onto how much space you can fill in there. Ask us any questions that you want. We'll email you back right away. We'll get back to you as quick as we can. If it's after business hours, we may call you in the evening. If it's during business hours, we'll probably call you back within a minute or two after you fill out this form and send it in to us. But only for those people who will fill out this form and send it to us, we will offer you won't find it on our website, okay? I need to make that really clear. You will not find it on the website. We will make you a nice discount offer and make this even more affordable for you if it's something you want to do. Look, I don't I don't want to spend time with people who aren't serious about making money in the stock market. I don't want to spend time with people that want something for nothing. Because if you want something for nothing right now, you want more for nothing later on, and you want more for nothing later on, and you want more for nothing later on. About 5 years ago, I had a guy approach me, and he said, look, I've got X number of dollars in the market, and if what you're saying really works, if it really does what it's supposed to do, then I'll give you a percentage of my profits. Now, I had to explain to him that technically that's illegal. I cannot do that. That would be playing the role of a broker or a hedge fund manager, and I could go to jail for that. So I said, look, I can't do that. He said, okay, then forget about a percentage of my profits. If what you're saying really works, let me have it free for 3 months. And if I've even made half the amount of money that your program costs, I'll purchase the whole thing from you. Now, I've been approached many times with offers like that. I don't know why I did it that one time, but I went ahead and said, okay, I'll give that a try. And the agreement was that in 90 days, if he even made half the money back that the program cost, he'd make the purchase of the full program. During that next 90 days, he called or emailed or texted me probably 2 or 3 times a day on average. Now, I don't care if my students do that. I've got students that when they're getting started, I hear from them 2, 3, 4 times a day. That's fine. I welcome that. There's no additional charge for that. You're absolutely welcome to call and get our help, to email or text message me and get help. That wasn't the issue. The issue was at the end of 90 days, knowing that every single trade I had sent out to my students in that 90 days was at worst a break even, and the majority of them had between 20 and 30% return on them. Knowing that for a fact, he told me at the end of 90 days that he needed another 90 days to make enough money to pay for the program. People that want something for nothing continue to want something for nothing. If you want something for nothing, go out on the web and grab all the free information you can, and you will get exactly what you pay for. Folks, I can't give away the program. I can't charge nothing for it. I try and make it as easy to do as possible by allowing the monthly subscriptions or the quarterly or the annual subscriptions. More often than not, people look at the value they're getting for a lifetime purchase, and that's where they jump in. But for anyone who will take the time to either fill out that form or call, if you'd rather just pick up the phone and call, make a phone call. If we don't answer when you call in, it's because we've got other people on the line. Leave a message, we'll get right back to you. We'll get back to you quickly. For anyone who takes the time to fill out that form and send in to us, or makes a phone call to us, for a limited time, I'm not going to leave it open indefinitely, but for a limited time, I'll offer you a really deep discount on those prices that I showed you. And that's just to give you some incentive. I'll be brutally honest with you. I want to make it a more attractive deal for you. I think it's the best deal in the industry, considering the content, the value of it, the success of it. I think it's the best deal in the industry, and I'll make the deal even better to make it easier for you. Take the time to fill out that form and send us an email or make a phone call and check it out. And no one, like I said, no one in my company will try and talk you into purchasing this. You will know if this is a good fit for what you're trying to do. And I'm going to do one thing. Let me go back to here as a way of ending this. Let me see if I can do this quickly. I'm going to go back. Does that give me all my slides? Let me go back right here. I'm going to warn you really quickly of the mistake that people make on a regular basis, okay? I had as far as people signing up for Safe Option Strategies and joining our program, I had one of the best months ever in that 2-week period of time right there. It was one of the best months we've ever had at Safe Option Strategies. And it made me a little bit sad that what compelled people to take a close look at what we were doing was the fact that they had already lost 20 to 25%, and the ones that were down here had already lost 35%. Look, it was great that we had a whole bunch of people in that 2-week period join our program, but it made me sad that they waited until here. A lot of those people, not every one of them, but a lot of those people, they saw one of our presentations back here. They saw one of our presentations back here. But you know what? When this is going on in the market, no one needs help with anything. When this is going on in the market, no one needs any help with anything. All of a sudden, everybody needs help here. But here's the sad part to me. Here's the thing that really saddens me. All these people that saw the program back here, I was still trying to get them to see that there was a way to not lose all those profits they had gained going clear back to 2009. All those profits they had could have been preserved. I don't know. I'm not predicting this. I don't know if this is the beginning of another pullback and test of this bottom right here. But if it is, don't wait until we're down here to look at this program again and say, oh, now I need some help because I just lost another 20% of what I had. Don't wait until then. We've had a great 6-week bull run since we bottomed out over here. In a matter of a week, we could give it all back. Don't wait until then to do something. Do it when you've got some money back and you can protect that money. I'll say it again. Making money in the market is easy. Learning how to not lose it is the tough part. Learn that now while we're still up here. And if you learn it now and we get up here, you'll be glad you learn it the next time it comes down. Look, that's the closest thing you'll ever get to me from a sales pitch. Folks, I want to help you out. Can't give away the education, can't make it free. But you'll get more for your money through Safe Option Strategies than anybody else out there. Listen, I genuinely, sincerely hope that I hear from you, that you'll at least take us up on the offer to check out what our discount price is. But if not, I hope I hit something there. I was trying to just go back to that ending slide. There we go. If I don't hear from you, I want you to know that I wish you the absolute best. I hope you're successful. I'm not wishing for anyone's failure, strictly for the sake of our company signing up a few more people. That's not the type of person I am. I wish you well. I wish you success. But if we can help, let us help. I hope to hear from you. Thank you. Bye-bye.